Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday the 30th of June. Now into this session we've still got the dollar strength bias that we've had playing out ever since this Federal Reserve meeting a couple of weeks ago. Now the dollar strength is seemingly now starting to form a pivot line of support on dollar index. 91.25 to 91.60 is a good basis of support for that dollar index now as the market picked up again. Yesterday it seems as though that the labour market is still a key focus for Fed speakers, and in the next few days we've got a load of data that will suggest that or point towards the labour market and how the labour market is developing. We've got the ADP employment numbers today, also weekly jobless claims tomorrow, and of course that crucial non-farm payrolls report on Friday. Now, the dollar strength that we've got as factoring across markets, we've got forex majors that are still being impacted by that, but also commodities as well. The commodity, certainly on the precious metals, have been weighed down by that dollar strength, but also is there now starting to be a bit of a corrective turn on the oil price as well? We'll be looking at that today. So with regards to indices, well, we're still very strong and positive on indices, and it'll be interesting to see how the reaction is in the wake of the payrolls report on Friday, I think. So looking at the data today, we're also looking out for the Eurozone inflation numbers and how that's going to impact, certainly on the euro. Expected to be a little bit of a drab inflation data, which is in contrast to other areas that we've got inflation building, not in the Eurozone seemingly so much at the moment. So don't forget the INFINOX support and resistance table at the end of the video for trading levels. So the charts we're looking out for today, a couple of forex majors. We've got cable, which again has been weighed down, as has the Aussie. We're looking at both of those and looking at also the oil price, potential corrective signals coming up on a near-term basis. So let's have a look. And moving on now to the INFINOX MT5 platform now, and just starting off with a quick look at dollar index really. We saw that sharp rally in the wake of the Federal Reserve and then the just corrective drift, but it's now forming support in this band, 91.25 to 91.60, and that is a key basis of support to the downside now with this near-term dollar positive bias that we've got playing through markets. And if you move that through to cable, we can see that cable has been weighed down by this Federal Reserve meeting. As I said, the rebound that we've seen in cable has faltered around this 40 big figure level. What a pivot line that is, pretty much to the pip. On several occasions that has been used as a key turning point, and again weighing down. The market is now back again underneath this long-term primary uptrend, which again suggests that we are playing out this big range play now. So anything back in towards 36.70 to 38 big figure is buying opportunity level, I think, within the range. 40 big figure is resistance. Above 40 big figure, you're looking at more positive bias again. But certainly given the RSI failing and faltering underneath the 40-45 area, we're looking at negative bias near term towards sort of the bottom area of this trading band. But certainly cable sort of falling over again and still seems to be under pressure this morning. Negative bias you can see through the 4-hour chart. Anything towards 50 area on 4-hour RSI up towards 55 is selling opportunity level for, I think, a retest of that 37.85 area near term. Moving on to the Aussie, again another market that broke down in the wake of the Federal Reserve meeting. Big key breakdown below that support line, which now becomes a basis of resistance, sort of 75.30 up towards 75.80 area. And I think, again, looking at that, if you zoom in, you can see the bull failure around that 75.80 area that we've seen that now produces a level of resistance. And you can see on the on the daily RSI, anything around the 45 to 50 area, it seems to be sort of faltering, where the market falls over negative candle, big negative candle yesterday, which suggests, I think, that we're still looking for a bias towards a test, probably that 74-75 level of support. And you can see again on the 4-hour chart, negative configuration. I think anything around 50 probably selling opportunity level there. And finally on this oil price, this strengthening dollar, interesting. Is that starting to weigh on oil? Well, a big bearish engulfing candle that we saw 2 days ago. Negative key one day reversal, bearish key day reversal, whatever you want to call it. It's a negative signal near term. If you look on the 4-hour chart, We've also now got resistance starting to form around 75.50 to 75.75. But also, I'm going to show you a couple of charts. Let's look at the stochastics here, stochastic sell signal, but also a MACD sell signal as well on oil. So these sell signals are or at least profit-taking signals are starting to build up, and we need to be wary of that, I think, as oil starts to find resistance overhead and maybe starts to test lower. So if you start to see oil trading certainly below that initial support 74.75, maybe even then starting to come back towards test 74 figure is a key near-term support. But look at that RSI failing around 50 now. So thanks for watching. I hope you found it informative for your trading. Join me again on Friday for this crucial non-farm payrolls report. So I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.